Guys, I've told my horror story before with S Corp clients, and how do you know what reasonable comp is? My horror story is when they went after that CPA who was a friend of mine for $125,000, arguing that he knew and that he knew better and that he should have made sure his clients took reasonable comp. I'm a huge fan of RC reports. RC reports, it's about $1,400 a year. We're charging the S corps that come to us under audit $750 a piece. We'll probably make between $10,000 and $20,000 with RC reports. But if you have S corp or C corp clients, they have to each year get a report, and the report is as simple as possible. RC Reports has a huge database of businesses. It will give you a report that you can rely on. And so far, to date, when we produce that report, not a single auditor has challenged it. The critical thing right now is for your clients to get that report to support the number they're taking on the return that you're taking on that return that you're signing. Best way to do it, RC Reports. Go check it out. Okay, you can find them. It's trn.rcreports.com. Again, trn.rcreports.com. Go there, you'll save $100. It will change your practice, create an annuity stream for you, and bulletproof your clients' corporate returns. The Tax Rep podcast is now proudly partnered with Nice Job, the experts in reputation marketing. Reviews are so important for attracting new clients. Before Nice Job, I would ask people to leave reviews, but they would usually forget, and I didn't have a way to stay on top and remember to follow up with them. That's where Nice Job comes in. Their smart follow-up campaign recognizes who hasn't left a review yet and automatically sends carefully timed reminders that can increase your chances of getting a review by 300%. I tried Nice Job for Tax Rep, and it's been a game changer. We added 33 five-star reviews in our first month, and our Google business profile is like a magnet for new customers. You can try Nice Job for free for 14 days and get 50% off your first 3 months by visiting nicejob.grsm.io/taxrep. nicejob.grsm.io/taxrep. I'm going to put a link in the description of the podcast. Try it. It will be a game changer for your business as well. How do I manage my tax rep practice? How do I get transcripts? How do I track what is going on with the IRS with every single one of my client cases? How do we complete the offer forms, the powers of attorney, everything? We use Tax Help software. Tax Help software is the cornerstone of our practice. We use it for its intelligent ordering. Every single night, it will update the transcripts on our clients, so we will see things happen long before those letters even go to the mail. We can then, react. We can let the client know. We can get all the transcripts we need to determine what our client's best options are, when is the debt going to expire, and we can fill in all of the IRS forms and get them filed accurately, the analysis done correctly. If you're interested in giving it a test, go to taxhelpsoftware.com, use promo code TAXREPTRIAL, all one word, all caps. You'll get a free 2-week trial. Again, that's taxhelpsoftware.com, TAXREPTRIAL, all caps, for a free 2-week trial. If you love it and want to buy it, use TAXREP10, capital, all caps, TAXREP10, TAXREP10, all caps, one word. You'll save 10% on your purchase. It will be the engine that runs your tax rep practice, just like it's what we use for ours. Hey everyone, thanks for joining us on this week's Tax Rep Network podcast. I'm Eric Green. Joining us again is Ken Dettman. Ken was here before when we were talking about the ERC credits and how they should be done properly. And since then, of course, there's been a whole lot of news about all these fly-by-night places. The IRS has frozen that. We're not talking about ERC really today, but for those of you who have already seen Ken, know that he has built a huge organization doing it properly, and is now, kind of I think right now watching the chaos probably with how many of those people didn't like what you told them, went somewhere else, and are now going to pay the price.
Yeah, it's a sufficient number of them. Certainly.
We have them coming in,
Yeah.
and they'll come in and say, well, what can we do? And I'm like, let's hope you don't go to jail.
Yeah. Yeah.
So, but that's actually, I'm much more excited about your new project because the Corporate Transparency Act is going to be big. Whether you like it or not, like everything else, all of CPAs, EAs, to an extent, attorneys are all going to become the gatekeepers for the government again. And so filling out these forms, we were just starting to dive into it. And you guys have developed, it's, by the way, for everyone listening, I've actually walked through this and we're going to be doing a webinar on November 15th. So if you want to join us, Penn has launched File Forms. And what File Forms does is it will complete the forms and it walks you through, and that's what I liked about it. It walks you through the process. It's very user-friendly. So, Ken, better than me blabbing about it, what prompted the idea and kind of walk us through what File Forms does?
Yep, absolutely. So I've been a tax professional for over 15 years, and a significant part of my practice was cross-border. So worked with a lot of certainly U.S. taxpayers that had to file FBARs, which I'm sure many of your members are familiar with. Yeah. Many of my inbound clients would look to me for helping with company formation and registered agent services, things, of course, as a CPA I wasn't doing, but would help facilitate. So very, very familiar with the world of informational reporting, whether it be to the IRS or other departments or agencies. So this was in my wheelhouse, and I remember back in 2020 when this was starting to pick up some steam in Congress. I remember looking at it, and it passed actually January 1st of 2021 with an effective date essentially of January 1st, 2024. So it's like, this thing's 3 years in the future. Let's forget about it. And January 1st, 2021, this was like right on the eve of the American Rescue Plan being passed. We had Moderna and I think it was Moderna and J&J was just about to be approved. Everybody was paying attention to vaccines. Nobody was paying attention to what the heck was being passed in Congress that wasn't COVID related. Right. So the Corporate Transparency Act snuck into a defense funding approval for fiscal year 2021. President Trump rejected that. Congress overrode it. And so, the word out there is that the Corporate Transparency Act received, unanimous bipartisan support, when really it was kind of a pimple within a much broader, act that was being pushed through. So I've been part of similar types of rollouts of informational forms. For example, if you remember when the FBAR moved from just an economic interest into a signature authority interest, right. All of a sudden you have CFOs of multinational companies now having to file FBARs on their own. And if you recall the chronology there, FinCEN kept having to delay and extend certain types of obligations within that signature authority definition. It was pure chaos. And, I've also been part of when the IRS started requiring foreign disregarded entities to file, or foreign owned US disregarded entities to file 5472s. That came out of nowhere. The IRS, certainly didn't run a campaign to, create any education there. And that thing was missed all over the place. And so, I'm starting to, we're starting to get close.
That's called work creation for those of us in our field.
So I kept an eye on the Corporate Transparency Act and BOI, and I sort of, was thinking this at some point would be a really nice service to get involved with, because I figured it was going to, similar to somewhat the ERC, it was going to come out of nowhere, At some point, it's going to catch wildfire. Everybody's going to be talking about it. They're not talking about it today, but rest assured, there's going to be some juncture in 2024 where this is the talk of the town in the business community. And I'm also familiar with interacting with government technology. So I'm very familiar with interacting with FinCEN's current BSA e-filing system for the FBAR, and I'm familiar with the IRS tools that are out there. And unfortunately, they're not often very, user experience, user interface focused. We just learned literally yesterday, right, that the IRS is piloting this free file system with 13 states or 14 states that are getting involved. I don't think anyone's holding their breath that this is going to be a better product to use than a TurboTax, right? So, the genesis, the idea behind file forms is to create a TurboTax-like experience for the purpose of filing the beneficial ownership reports, breaking it up into different steps, as you've alluded to, having different tool tips, education throughout the completion of the form, as compared to if you file an FBAR today, which is the proxy that we use because FinCEN hasn't released the technology. What do? You go grab a PDF, you offload it from FinCEN's website. You're manually keying something into a 5 or 6 page PDF. At the same time, you're maybe referring to some instructions to tell you what goes where. It's not a great process. It overwhelms, it overwhelms preparers and it overwhelms business owners or individuals who are responsible for filing those forms. So file forms, our inspiration truly is TurboTax. We love Intuit products, and we wanted to create something that created that type of experience for the purpose of the BOI. I'll plug one other feature that's very important, and we can probably talk about the form itself and the information required. The most annoying part of the BOI report that I project is going to be collecting copies of driver's licenses and passports for beneficial owners. And when you have an entity that might have 10 beneficial owners, and we'll explain why that's realistic, having some administrative person chasing 10 different copies of passports and driver's license is going to be a huge pain in the butt. So what file forms allows you to do is to send push notifications to your beneficial owners to have them complete the profiles on behalf of the company.
Right. No, I mean, when we walk through it, what I like, it is very TurboTax. Who has to file? Do you qualify? Are you required? And it walked you through step by step. It was very user friendly. I mean, I have a cursory understanding of Corporate Transparency Act. In fact, we've started now, again, right? We'll worry about it when we have to. Now we have to. We've started now kind of digging through the law. Because, by the way, you can't always trust those summaries that you read in places. It's amazing how often they'll say something and you're like, yeah, that's not the way I read it. But what I liked is it did walk you through that. Are you required to do this? And again, you can send to the beneficiaries. It was very simple. My question at the time, as you recall, was, okay, we do this. How do I know it got filed? And there's going to be a confirmation that comes back.
Yep.
And also give it a few days, maybe a week or two. I should be able to go online and actually confirm it's there with the government, theoretically. We'll see. And it's and also, if I'm not really sure, what I liked was you have a
wizard is what we call it. Yeah, a qualification tool or a wizard. Yep.
But also, I could even get an opinion. I could actually seek professional help. You have, in other words, a higher level, especially if I come in and, sometimes it'll be very obvious. But if you're in that gray area, I have the ability to actually speak to someone who's an attorney, who's a professional focused in this, and get an opinion, which is big.
Which is an inspiration as well from TurboTax. As you're walking through the steps of TurboTax, and all of a sudden TurboTax sort of senses, wait a sec, there's some complexity here. Would you like to move from the self-service platform to our live platform, where you're actually getting to interact with a live CPA? So File Forms has a similar platform that allows you to move to a premium, which then gets you access to an attorney. So you're absolutely right. Some of these are going to be very simple. Single owner, mom and pop, husband and wife. But when you get into different classes of ownership or units, when you get into substantial control, and this is a really interesting one, that all of your C-suite are effectively beneficial owners. Many of your board of directors are going to be beneficial owners. And then there's a catch-all category that says that if you just, generally have substantial influence over the company, you're a beneficial owner. So that's when things get a little bit more complex to make sure that you're capturing the appropriate pool of reportable beneficial owners. So there's 2 points of complexity with the beneficial ownership, or we're calling it the BOI report, and so is FinCEN. It's, do I have a reportable company? And if I have a reportable company, who are the beneficial owners? Sort of sounds simple. It will be for most companies, but there's going to be a large pool of companies that are scratching their heads trying to figure out why they have to ask their COO for a driver's, copy of their driver's license and get them to agree to be part of this filing.
Right. So, and for those people listening, on November 15th, we will cover the Corporate Transparency Act, and then you'll actually get to see a demo of, at least we'll walk you through how file forms works. For the accountants listening to this, and many of our audience are CPAs and EAs. Mm-hmm. I have a number of clients. How can I work with file forms? I mean, do I just go one at a time? Do you have a partnership program? Because there are going to be tax professionals that have a lot of clients that need to do this.
Yep. So there's a couple of different options, and maybe before we jump into those options, identify or address the elephant in the room, which is that the AICPA has already written Congress, and the state boards of accountancy are not today comfortable with the fact that supporting clients on BOI does not constitute the unauthorized practice of law. So you have a lot of CPAs that are going to be very nervous about doing this, and probably should be nervous until there's clarity, not just with the State Board of Accountancy or the AICPA, but also their insurers. So the main players in the insurance space are still telling the CPAs that, in order to stay within the bounds of your E&O, you should avoid anything that the state says that you shouldn't be doing. And BOI is not yet even, there hasn't been one state that's definitively come out and said it's okay, but they have come out, several states have come out to say, we're still contemplating this. So, which is important to think about when considering the ways that CPAs specifically can leverage file forms. So there's really 2 options. There's a partnership option, an option to basically educate your clients about BOI, partner with file forms so that we can give you material that will be helpful and useful for educating your clients, and then simply directing them to our website for the purpose of them either using the self-prepared, the DIY option, or upgrading to a premium option, in which case they are going to have access to an attorney. And of course, we offer commissions to CPAs that want to partner under that affiliate relationship, and they can sort of wipe their hands clean. We did our duty to educate our clients that this exists. But much like annual reports, like a lot of CPAs don't like to touch annual reports, and for good reason. It's important to remember the BOI is filed with FinCEN. It is not a tax form. So you're going to have a lot of CPAs that are just going to take the position of, we shouldn't be doing this work, or we don't want to do this work. And that's where the referral relationship or the affiliate relationship is appropriate for them. We have designed a version of TaxNow that allows a CPA or a lawyer, or really any enterprise user, to use it as their tool for collecting and preparing information. But if they use the enterprise version, they are going to get wrapped into paid preparer rules. They're going to be bringing on more risk. What is nice about the enterprise version is it has bulk import and export features. So to be able to organize all of this data outside of file forms rather than manually creating each company is a huge plus. But what's really nice is they can import all of the core data for the company. They can put the name and email of the beneficial owner, click a button, all of those requests go out to the beneficial owners, for them to complete and the beneficial owner has to include address, date of birth, and copy of passport and driver's license. When you're talking about hundreds or thousands of beneficial owners to chase, that's a really nice feature. And as you know, a CPA or a lawyer is not going to have in their files copies of driver's licenses and passports, nor are they even going to necessarily know, all of the beneficial owners. So there's a lot of due diligence that a CPA would have to do to make sure that they understand, my prior clients, did I know every, the name of the CEO and his address and the COO and general counsel, and have an idea if there was somebody, behind the scenes that was having substantial control. So we think that the enterprise version is going to be more appropriate for attorneys who are either closer to what are defined as pre-existing entities, so entities that were formed before January 1st, 2024, or use it as a tool to file alongside company formation, right? So every time you form a new company, today the law says you have to file this within 30 days. So there is an enterprise version. We think CPAs are in a much more comfortable, safer space to simply refer their clients. And I'll just add one other thing that as part of these rules, right? If there's a change of information, if one piece of information across the originally filed form changes, there's another filing obligation within 30 days. And that is going to be a huge pain in the butt for CPAs to have to monitor and create exposure that if their client doesn't tell them that they merely, fired their COO, and they don't file within 30 days, it's a ridiculous requirement, but it is the requirement today. The monitoring aspect of this makes it really, really dicey. So there's a whole, a whole boatload of reasons that we're not really, and I am a CPA, recommending that CPAs try to take this work on.
Right. No. And if you can get paid referring, most of the folks I know would rather get paid referring. In fact, the podcast prior to this was with Out of the Box, which is outsourced bookkeeping.
Yeah.
My bookkeeping. Most accountants don't want to do this stuff. Their time is better spent doing what they're doing. If you can I'm a big fan. If you can outsource it and get paid, that's the way to go.
With the shortage of accountants, this is not their highest and best use. Absolutely not.
And especially playing in the gray, it would be better. But even if they came out and said, yeah, you can do this as part of your practice, just walking through this, keeping track of everything your client is doing. And most of the accountants I know don't have 20 or 30 clients. They have 500, 700. I have one member that has 2,000.
Yep.
You're just not. No. So I think the partnership program sounds big.
Well, and don't forget it, Eric, that there is not a broad exemption for accounting firms. There's an exemption in there for accounting firms, but these are accounting firms registered with the SEC and under Sarbanes-Oxley. These are not the mom and pop accounting firms. So most of your clients are reporting companies and will have to file beneficial ownership information reports themselves, not just on behalf of their clients.
Right. No, it is. Things are going to get interesting. Things are going to really get interesting. 30
plus million pre-existing entities, an estimate of 5 million new entities in 2024. A number of CPAs that I've spoken with who have heard of this but haven't really investigated, the first place they go is cross-border. They think, oh, this is a FinCEN related filing. It's got to be cross-border related, and I probably don't have to worry about it because I just don't do that much cross-border work. Wrong. This is pure, almost purely domestic. This is any U.S. corporation, limited liability company, any type of partnership, even a general partnership that's not a true legal entity. If they have under 5 million in revenue and they're not highly regulated, they have to file. If you're a foreign company that registers to do business in the U.S., you're a Cayman LP that registered in Delaware, you also have to file. So this is, many of them are thinking this affects 5% of my client base. No, it affects 95% of their client base.
Yeah, no, And that's what we're finding as we dig through it. We're like, ooh, this is gonna tag, my corporate partners now. We have how many clients that we're doing annual, filings and all of that stuff for. They're not going to be happy when they find out we got to do this too.
Well, they're not going to be happy paying, law firm rates for something that is, for most businesses, routine. Now, they should be paying law firm rates when, they sort of get into that realm of complexity where, a premium option should be involved. But, simple ownership, no C-suite, the owner operated, or somebody, think of somebody who does their 1040 on TurboTax, but they have an LLC that they use to hold an Airbnb property, right? They don't have an accountant or attorney to go talk to or to educate them about this stuff. So you're going to see a lot of missed filings. I have to imagine FinCEN will have a great deal of leniency. If this is anything like the way they rolled out FBAR, we're not gonna see them holding strong to this penalty of $500 per day up to $10,000 per entity. I think at least in 2024, and this thing will evolve.
Yeah, it always does.
We're submitting comments to Treasury on some of these. They just proposed to move the 30-day deadline for a newly formed entity to 90 days, which is a good opportunity for us to submit some new comments. And one of those comments is that, what are lawyers and accountants comfortable with in terms of deadlines? We're comfortable with the 15th or the last day of the month. If you're forming an entity, you're a law firm that forms an entity every day of the year or every other day of the year, you have a filing deadline related to the BOI every single day of the year at some point. So, we're recommending that FinCEN move this to some type of, if you file in, if you form an entity, say in January, then you file by either April 15th or April 30th. Create some fixed deadlines to allow accountants and lawyers to create process within their practices.
Or almost like the payroll returns. Like you look at it quarterly. Everything in the first quarter would be due like 60 days out. Second quarter, if you did it like that, one, you could do it in bulk, and two, you're right. You don't have this, calendaring of every, which I assume they're going to do every day.
Yep. And what are your thoughts? So, I mentioned change of information filing. You have a operating company with $4 million in revenue. It's a reporting company. It's got a C-suite of 5. It's got a board of directors of 5, and it's got, two 50-50 owners. You've got 12 beneficial owners to report there. Anytime that there's a change in those 5 C-suite, or if they change from, their office from suite address 200 to 201, a new filing obligation, and this was not extended to 90 days. This is still 30 days. Does FinCEN really need to know every time you fire the COO or the CFO? Is there really value there? It just seems a little bit of an overextension.
I agree, but you're talking about a government that loves information. Look how much they collect on all of us.
Yeah. Did you stay close to FATCA? Do you remember when FATCA went live in 2017? So, we've had FBARs forever. FBAR is self-reporting. These are U.S. persons reporting about financial interests offshore. Then FATCA gets implemented. FATCA is affecting financial institutions. FATCA is saying every financial institution, primarily outside the United States, we want you to tell us where you have U.S. account holders. And so the self-reporting platform was the first to be instituted. Then you have the sort of corollary reporting where, all right, now the U.S. persons are telling us about their bank accounts in Bermuda, and now the Bermudan financial institutions are telling us where we have U.S. account holders. They should be able to use that information to identify inconsistencies or irregularities. FinCEN has been regulating banks, KYC, AML, BSA for years. So they have that BOI information for a lot of reporting companies. Now you're getting the FBAR equivalent with BOI. So this is the self-reporting. The funny thing is with FATCA, not to knock the U.S. government, but they haven't done I won't use a foul word, but they haven't done diddly in terms of using the information they've collected over FATCA. So to be seen whether we have this insanely invasive process of collecting all this information, whether anybody's actually going to do anything with it.
Yeah, no, and add to that the Bank Secrecy Act, all of the reporting for cash or cash equivalents, used car dealerships, jewelers, it's nuts.
Yeah, that one was wild. That one was wild too. And guess what, Eric? That came out of nowhere. I subscribe to tax notes and a bunch of different. I get that wasn't on my radar. That kind of came up, and I'm like, oh gosh, if thank God I don't have a ton of clients this impacts, but I'm sure there are folks where there are a lot of clients that they deal with that it impacts.
When I spoke to the head of the program, I remember talking to her. I'm like, you're looking for the used car dealer here. And she actually said, where it's a real problem? Southwest. The cartels do their dealing. What do? You buy a few Mercedes, drive it across the border.
Right.
All right.
Interesting.
You buy jewelry. Your girlfriend wears it across the border. That's how they're laundering their money. So this is really aimed at at the people dealing in cash. And it's really along the borders, although frankly, I think the cartels are everywhere now. But that was really, like they said, where they found it to be a real problem.
Right.
I had used car dealers getting grabbed.
Right.
And again, that was hot for like 2 years, and then it went away.
Right. You'd expect that to have call it a higher hit rate in terms of the cash transactions. Being there's something nefarious around those cash transactions compared to the total cash transactions. Right. When you compare the pool of, by the end of 2024, 40 plus million companies that have to endure beneficial ownership information reporting. And I'm not from a policy perspective, I won't get too into the details of the weeds on political stances, but it will only capture 0.00001% of the entities that are actually perpetuating bad behaviors, and money laundering, terrorist funding, tax evasion are really the key things that the Corporate Transparency Act's trying to hit. On the other side, though, the United States is still kind of the last major economic country holdout of adopting beneficial ownership information reporting regimes. I mean, I remember when, I did a lot of work with private equity funds and Cayman and BVI. And I remember when all of a sudden the BOI rules were turned on in the Cayman Islands and the BVIs. And it was like, holy crap, this is happening here. And you can still form a Delaware LLC and put a registered agent on there, and no one will ever know who owns it.
Right. So listen, everyone listening, November 15th, I'm going to put a link in the description for the webinar. I'm also going to put a link down below if you want to go check out file forms, potentially set up your partnership now. And there's some great educational material right on the file forms website. So if you really want to read up, because I did, it's really good stuff. And so Ken, we'll do this on November 15th, and obviously, hopefully people go check that out. Anything else? Kind of last thoughts?
I go back to my estimate of when you're talking to a CPA and they kind of have heard about this tangentially, and they hear FinCEN. Do not assume that this only affects a very small population of your clients. If your clients are, for the most part, under $5 million in revenue, they are going to get wrapped into this. And it is important to be, in our view, and really with any non-core service that a tax practitioner or a CPA is engaging in, it's important to be proactive during your downtime. So we just passed October 15th. There's always a lull at the end of the year. for CPAs. They're also looking for, new revenue opportunities. Now is the time to start thinking about this. It's not after October 15th next year.
Right. Right. And actually giving your clients a heads up, now would be the time to do it, so that come January, on top of all the other chaos going on, you don't have to deal with this as well.
Yeah, tax season almost never ends. I'm glad I'm out of that world. I'm a recovering tax accountant, but it almost never ends. But you do get these little pockets. Take advantage of those pockets.
I remember being also I'm a recovering accountant. Do you remember when, well, at least when I got out of undergrad, you would interview with like small firms. After April, they went golfing.
Yes.
They closed on Fridays. It was casual back when we wore suits.
Yeah.
And then you picked up around August through October, and then now it is 365 days a year. It never lets up.
That's because the role of an accountant has evolved, very much so in a positive way towards not just an accountant, but a full service advisor, and in some cases a therapist. So you are servicing, your clients year round. It used to be, as you say, you would use your accountant to file your return, and those smaller practices somehow figured out how to have a high percentage of timely filed returns. I never figured that out. We were bum rushed all the way through October 15th. But yeah, you're absolutely right. And some of them took a month in the summer off. I remember hearing, I'm like, that's crazy.
I interviewed with a guy 20 something years ago, where he said, I make $400,000 in 2.5 months. The greatest job in the world.
Yep.
Not anymore. I mean, listen, yes, you can, but it's weirdly, I don't think anyone could pull off that 2.5 months anymore. Between waiting for information, K1s, everything else, aside from the fact that you said more advisory work, more compliance work, FATCA, FBAR, now this, it's unending.
Or the PPP comes out of nowhere, or the ERC, and now all of a sudden your tax CPA has to become an expert in SBA lending.
Right.
So that's the same thing with BOI. Where's the first place that business owners are going to turn? Not all business owners are lucky enough to have a lawyer on retainer, and if they do, they're expensive. They're going to turn to their CPAs. So being proactive and educating first, getting this information out to them before they come to you, is going to save CPAs a lot of time and anguish.
And the other thing is, for the CPAs and EAs, if you don't, they'll hear it from somewhere else, and then they're going to say, why didn't you tell me about this?
Yeah. Or even worse, they don't hear it from somewhere else and they don't file, and then they say, why didn't you tell me about this?
Right. Hopefully you have E&O insurance. Although, frankly, that's going to be an interesting thing. Are you required as an accountant to even inform them? You should, because if you want to keep your clients happy. But and again, at the bottom line, this is an income opportunity.
Yeah. Do you ever come across those Bureau of Economic Analysis forms that come out, every 5 years?
Yeah.
And it's like you get that. When I was a tax accountant, I'm like, what do I do with this? And does this fall within my responsibility? I think the BOI's got some similarities there. It's like, wait, this looks kind of like an annual report. We're reporting to FinCEN. I don't. This feels weird.
Yeah. No. All right. Well, Ken, thanks for taking the time. November 15th, we're going to be doing some really good education on the Act, as well as kind of showing people file forms, how it works. And everyone, I will put the links below, both for the webinar and where to go to file forms and check this out. And we'll see everyone on the 15th. Ken, thank you very much.
Thank you, Eric.
Everyone else, see you next week on Tax Rep Network podcast, but go check that out. Sign up for the web. We cap out at 1,000 attendees. We're going to blow through that with this. So go grab your seat quickly on that webinar. And, listen, Ken, I think you're going to be very busy.
We hope so.
Yep.
Appreciate the time, Eric. Thanks as always.
All right. Thank you.